Yes guys, welcome back to the channel as usual. So guys, we're getting close to Christmas now, only 10 days left. But guys, in this video, right, I'm going to go through two charts. I'm going to explain two charts to you guys, which are making me seriously bullish about Bitcoin long term. It's going to be talking about long term analysis, and basically just I can see a massive opportunity by looking at these two charts. They're really getting me excited. Just want to say a few other things as well, guys. So basically, yeah, it's getting into Christmas. I was out last weekend celebrating some Christmas stuff, but you can check that out on Instagram, guys. If you haven't added me on Instagram yet, MDX Crypto on Instagram. And I just wanted to mention that right now there is, people have been sending me messages. There's people out there, bad actors, who are pretending to be me on Instagram and sending people messages trying to get personal information, talking about mining rigs and all this kind of crap. Guys, just want to say I'm never ever gonna message you on Instagram trying to sell you shit and trying to get personal information. Don't get caught by these scammers, guys. They're absolute bastards. Just don't do it. Just want to mention that. I'll put it on the screen now. But add me on Instagram anyway, because you can see more of like my personal life. I had a few drinks on this weekend because it's getting towards Christmas. But guys, let's dive into the video. Two charts making me bullish on Bitcoin. And yeah, guys, please like, please subscribe. When you like and subscribe on these videos, it really helps them go further. I really appreciate all you guys' support. Getting loads of views on the channel recently. So yeah, just keep doing what you're doing, guys. You're all legends. And join MDX Trading, obviously, on Telegram. But guys, I'll see you on the screens. Let's talk about itty bitty bad boy Bitcoin now. Just before I show you those two charts, guys, for the long-term analysis, let me just recap. Let me just give you an update on the short term. So, guys, right now we are above the symmetrical triangle, which we're playing in a consolidation range. Like, guys, I said on my previous videos, if we're above this triangle, I'm bullish, guys. I'm bullish right now until proven otherwise. Like, at the end of the day, we're basically just about right now trying to make a new, basically a local high on this. If we can carry on up here, guys, the longer the better. And the only way I'm going to get bearish on this is if we come back down and break back through the triangle, guys, and then actually create a new a lower low, basically, as a downtrend would be that would be indicative of a downtrend. So if you look at the horizontals as well, guys, we're literally just playing in a range between, it's like 19k and 19.5 right now. I could see it going on for a little bit longer. The Neo Biotang is like super correlated, so whenever anyone goes long on BitMEX, it always goes the other way. So it's going to be, I don't know, right now, guys, I'm just agnostic, right? I am bullish because it's over the triangle. That's literally my strategy. We're above the triangle. I am literally just about thinking about taking profit on some shorts, but let's see how it plays out. If we get below the triangle, guys, it's gone bearish. Right now, it's bullish, guys. And if we break 20k, there's some sell orders up there and some big walls, but it's just, we're going to go to some charts right now, guys, and you know, we could just see this go sideways and break 20k. Comment below as well, do you think we can break 20k? But guys, just wanted to give you a recap on that. Now let's go into the two charts which are making me super bullish on Bitcoin right now. So the first chart making me super bullish on Bitcoin is this chart here. Now basically, it's very, very simple what this shows, guys. It's actually showing you what the returns are of all the different asset classes out there, what the returns are year on year going back around 10 years. So you can see here it says 2011, 2012, 2013, all the way up to basically 2020, which is this year. We're coming to the end of this year now, and it shows you what the returns were that year for that specific asset class. Now, obviously, we all know, guys, that Bitcoin kills it. Bitcoin is literally eating the world every single year, nearly every single year. You can see on here, Bitcoin has been performing the best. So let's go through this. So it says here, 2011, Bitcoin did 1,473% gains. That was Bitcoin. So it says here, highest return at the bottom, and then lowest return. Bitcoin was the highest returning asset class. Go to 2012. Bitcoin was the highest returning asset class. Go to 2013. Bitcoin was the highest return asset class. You're seeing a trend here, guys. 2014 was the bear market. So Bitcoin didn't get the high. It actually went down 50% or almost 60%. And you can see here, guys, that even on a bad year where Bitcoin only did 35%, it was still in 2015 the highest yielding asset class there was. Obviously 2016, obviously 2017, guys. We all remember 2017, 1,300%. And then 2018, big bear market, down 73%. And then 2019 was Bitcoin, and then this year so far, obviously it's Bitcoin. Bitcoin's killed it this year, and you can see here the accumulative the gains is literally like 627,000. I think that's actually like 6.2 million. 1, 2, 3, 4, 5, 6. That's like 6.2 million %, right? Gains Bitcoin's done over its whole over the last 10 years, and then the annualized return. So that's basically that broken down up to what's the average return each year. It's 203%. So you're averaging 203% with Bitcoin, guys. The Nasdaq, no chance. 20%, right? Nasdaq's like the second best, right? And it's tech stocks, so it's pretty much very similar to Bitcoin anyway. Nasdaq's number 2, 20% annualized returns. US large caps, US small caps, and you can see, guys, that what's the point, right? You look at gold, right? For instance, I'm a big advocate for gold as well. I think gold and Bitcoin are going to trade very similarly. I think they're very similar assets. One's going to have more returns because it's a smaller asset class than the other. We all know what that is. It's going to be Bitcoin. So right now, holding for my strategy, guys, like gold is probably going to be something I buy when we go into a bear market for Bitcoin. That's going to be my strategy to get out. I've showed you other stuff as well. I've got other charts I'll show you, which is going to give me an idea of when the top is of the next macro cycle. But looking at gold, guys, 2.2%, and even like high yielding bonds, guys, it's only just like 5% annually, which is actually quite good, right? 5% like a guaranteed annualized returns, actually not that bad, like especially when there's something which is low risk, right? Like a bond or a treasury, something like that. But you got to think about it like right now, what horse do you want to be in? This many years of data backing up that Bitcoin is doing such great gains. It's just the beginning of something massive, guys. And this, we already knew that Bitcoin was the best performing asset. We've already known that for years, but I got into Bitcoin late 2016, so it just reinforced it again, guys. Like the trend is that Bitcoin is the highest yielding asset class of anything, because obviously Bitcoin's cryptocurrency, and then you got to think about all the other cryptos as well. That's another whole video, the altcoins. So I just wanted to show you this chart, guys. Really, it just puts it in plain English, puts it in plain simple text. You can see that. Do you think this trend's going to end soon? Probably not. It's been trending like this for 10 years. The likelihood is it's just going to be more and more and more and more, and then we're probably going to see some massive escape velocity where like so much fiat currency is going to pile into Bitcoin for some macroeconomic reasons, which we're going to go into in a second on my next chart. The next chart makes me even more excited, guys, and I'm feeling hungover. This is how much I love Bitcoin. But yeah, you got preferred stock. So really interesting stuff. I'll put a link to this. Oh yeah, basically it's in the trading group, guys. So MDX Trading, just come on here. I post all these charts in MDX Trading, so you can get the access to these here. But that segues us onto nicely the next chart I want to talk about now. It's this chart, guys. Now, I think this was posted on Real Vision. Highly recommend following Real Vision as well on Twitter. They're pretty cool. They just come onto the space doing crypto stuff, and it's like Raoul Pal and these kind of guys talking with interviews of big players in the space. But I want to explain to you this chart, because this chart is literally showing the biggest opportunity ever in history, guys. It's literally like divergences on divergences here of just like, it's just going to explode. It's going to make, in my opinion, guys, this chart is showing us that this is going to make Bitcoin just the go-to asset to hedge against this crap. So let's just explain what this is. So you got, let's start with the easy one, right? So let's do the Federal Reserve debt, right? So total public debt as a percentage of gross domestic product. So the red line here is basically how much assets the Federal Reserve have on their books, i.e. basically how many dollars they're being printing, right? You can see here in 2020, the debt has skyrocketed right here, guys. And just to mention as well, it's not just the amount of dollars, but the Federal Reserve, when they go into debt, they usually like they buy like US treasuries, which then is kind of like a call on basically having people pay tax in the future. That's how they print more dollars. They buy treasuries, they print more dollars, and then it kind of puts the citizens of America in debt. But overall, guys, you can get an idea that the debt of the Federal Reserve is skyrocketing. Who knows whether they're going to start buying equities, all this kind of stuff. That's another whole video. But you're seeing that debt in the Federal Reserve's going up, and also that tailors to the M2 money stock as well. I'll put another chart on the screen now. The M2 and M1 money stock is basically just the amount of new dollars being printed, and it's an exponential curve, guys. And we know that more dollars in the economy means that hard supply or fixed supply assets or scarce supply assets will rise in value. If you own, one Bitcoin and there's 21 million Bitcoin, it's a fixed supply amount. So if there's more dollars every day and you still have that one Bitcoin and it's in a fixed supply amount, the price will rise over time. But that's not the really interesting thing. So the debt is skyrocketing, guys. The Federal Reserve debt is skyrocketing, but at the same time, the velocity of N2 money stock is going down. Now, what does that mean? Velocity of money. Velocity of money means how much currency is actually moving around the economy. So like how many people are buying and selling stuff, and how many people are actually transacting with each other in the economy. To actually see inflation happen, you need to see the new currency in the economy, right? So it needs to start inflating the amount of actual circulating supply, if you like. So for instance, right, if you have like Bitcoin, if you lock up Bitcoin for 5 years, and you never touch it, it's it's as if it's come off the circulating supply, which then limits the supply down. It's the same with currency as well, right? So when all these dollars are printed by the Fed or Treasury being bought to get into more debt to get more dollars, what you have to wait for is that money to actually get into the economy to see inflation. But what you're seeing is by the velocity of M2 money stock, the amount of money actually circulating around and actually be people using it for transactions. Right now, everybody's just hoarding their fucking money under their mattress because they're scared about what's happening in the world. Obviously, coronavirus is happening. It means people aren't spending. So the amount of money being spent in the economy, the velocity of money has gone down, and also the amount of debt's going up with obviously more currency. I showed you the M2 stock. So the amount of money in the economy overall is going up. The amount of people spending is going down. So that means it's actually dampening inflation. It's actually kind of deflationary, right? So you're not even seeing the beginning of inflation yet. And we all know inflation, guys. If you print shitloads of fucking dollars, it means other assets are going to rise in price. We already know that. And then you can see here the real gross domestic product, guys. And that's actually just sitting along this line. Hasn't really moved. It's on this kind of like real standard pattern, right? So you're seeing this basically, this is why this chart's making me so bullish. You're just seeing a massive divergence in two things: the amount of money in the economy and the amount of money being spent by people in the economy, the velocity, how many transactions are happening. So when these two things, right, actually turn around and begin to non-diverge and actually come to fruition to each other, so all of that money which is printed actually starts being spent in the economy, then you're going to see this massive spin-off of just mental, basically. It's going to be hyperinflation, guys, in my opinion. In the next 5 to 10 years, okay, look, it might be 5, 10, 15%. Let's be realistic, guys. Governments aren't going to stop printing currency. They actually are kind of being forced into printing currency because of all these massive social kind of macroeconomic problems. And what people are going to plead for is more stimulus. People want free money. Governments can't say no, because if they go and say, we're not going to give you any stimulus, then they won't even get voted in the first place. So we all know that system's kind of broken in that sense. But we know that governments are going to keep printing. I don't think 5, 10, 50% inflation a year is even, I think it's kind of laughable. I think it's going to be more like 50 to 100% a year when all this money actually gets into the economy. And I think that all these price predictions where people are saying, $300,000 at the top. So Citigroup came out and said they think $300,000. We have like Grayscale saying 250. We have all these big institutions, like even JP Morgan coming out saying it's going to do 150. But like, what I'm thinking is because of this divergence in the amount of money there is being printed and the amount of money being spent, when that all catches up with the economy, I think like these price predictions are actually going to be completely blasted. They're going to be completely blasted, and people are underestimating what's going to happen because those price predictions aren't countering in inflation. They're not inflation adjusted price predictions. So, if say we're going to get 200, 300% more inflation over the next 5 years, you could see a $300,000 prediction if that actually comes true. If that's actually inflation adjusted, we could be looking at 500 to 600. Guys, it could go absolutely nuts if the dollar actually does begin to collapse because of all this crazy fiscal and monetary policy from government. So basically, that is what is making me super bullish, guys. I just wanted to get that off my chest for you guys. Please comment below as well what you think, because it's making me just I'm looking at like all the gains Bitcoin makes and all this money being printed. It's just this perfect storm for Bitcoin and obviously assets which are hard supply, but Bitcoin's going to be the biggest winner because over the last 10 years, it's shown that trend that it is always the biggest winner. So guys, please please subscribe, comment below as well what you think. We'd like to hear what you think, and join the trading group, guys, MDX Trading. I'll put it on the screen now, and I'll see you guys in the next video. Legends, I'll see you guys later. Cheers.